US stocks slide on fears Trump will announce car tariffs tonight. UK inflation falls unexpectedly. Australia's inflation rate ticks down as budget rebates look set to keep repressing the headline CPI rate. And Indonesia's currency is the lowest it's been since the Asian financial crisis of 1997. That's coming up in our 5 Things in 5 Minutes on Thursday, March the 27th. And then in today's bonus deep dive interview, ANZ commodity strategist Sonny Kamari tracks the fortunes of silver following record-setting price moves for gold.
Going forward, we believe silver will be getting support from rising gold prices as well as strong industrial demand.
But first, in 5 and 5 with ANZ, US stocks are down this morning after a report Donald Trump could announce tariffs on car imports later tonight. The S&P 500 was down 1% by 4 a.m. Sydney-Melbourne time, while the US 10-year yield was up 3 basis points to 4.35%. Meanwhile, annual UK inflation unexpectedly fell to 2.8% in February from 3% in January, ahead of the Chancellor announcing £14 billion in welfare spending cuts overnight. ANZ economist Bansi Madhavani says UK headline inflation was lower, but underlying services inflation was slightly above forecasts.
Wage costs are the largest determinant of services inflation, and so far we have seen that wage costs have remained sticky. What that will tell the Bank of England is that disinflation progress is likely to be slow and bumpy. So in that sense, the inflation data were mixed, and what it means for the monetary policy is our assessment is that Bank of England will cut interest rates, but in slow, gradual increments.
As of 4 a.m. Sydney-Melbourne time, the US dollar index was up 0.4%. The Aussie dollar was flat at 62.96 US cents. The Kiwi also unchanged at 57.31 US cents. Gold was down 0.1%, $3,052 an ounce. And crude oil futures, West Texas, were up 1.2% at $69.82 US a barrel. Number 2, Australia's monthly inflation indicator fell to 2.4% from a year ago in February, from 2.5% in January. ANZ senior economist Adelaide Timbrell says a key swing factor was a 2.5% dip in electricity prices after a large rise in January.
There was also some strong falls in both domestic and international holiday prices. And holiday prices overall are up just 1% year on year. Now, that doesn't mean everything was weak. We did still see some stronger increases across a larger number of broad categories. Food, health, and education are all running above 3% year on year. And we also saw an increase in the monthly change in rent prices over the month as well.
Number 3, Adelaide says a key policy extension in Tuesday's federal budget is likely to affect headline CPI readings over the next year, just as state and federal energy rebates have repressed it during the past 12 months.
The extension of the Energy Bill Relief Fund announced in the federal budget will extend the amount of time that energy is a factor in the CPI. So what I mean by that is the longer we have electricity subsidies, the longer we're going to have temporarily lowered inflation, which will be followed by temporarily raised inflation. So because we know that is a policy shift and a temporary one at that, the Reserve Bank is likely to look through some of that volatility, just like they are likely to look through some of the volatility in the current energy roll-off, which has been a little bit bumpy through the start of the year.
Number 4, the Bank of Japan's governor yesterday said he wanted to keep his options open ahead of the central bank's rates decision on May the 1st. The yen weakened slightly on the comments. Number 5, worries about Indonesia's fiscal position saw the rupiah slump below COVID pandemic levels to 16,600 to the US dollar in recent days. ANZ head of Asia Research, Koon Goh, says that means the currency has hit its lowest level since the Asian financial crisis in 1997.
Sentiment towards rupiah remains poor due to concerns over potential fiscal slippage, governance worries over SOEs coming under control of Danantara, the new sovereign wealth fund, and law changes which allow the military to have a bigger role in the government. Bank Indonesia continues to be active in intervention, but clearly there's not much point trying to defend any particular level. Bank Indonesia will need to utilize its FX reserves carefully, and given that we are entering an environment where US tariffs are set to be announced next week, this could provide for a very bumpy external environment, which will likely see conditions remain very challenging for the rupiah.
Coon Go there. Now, in today's bonus deep dive interview, ANZ commodities strategist Sunny Kamari tells my colleague Alex Tarrant why the silver price is likely to keep rising this year, even as the gold price grabs the headlines.
Silver has been one of the top performers in commodity space, rising by 16% so far this year. And this rally is primarily linked to the bull run what we have seen in the gold prices. So just to give you an idea about relative performance of gold and silver, normally in rising gold price environment, silver tends to outperform. But things have been different in the latest price rally, which started back in 2022, as silver is still far from its historic high of 50 per ounce, while gold has been making successive highs. So gold and silver price ratio is widely tracked by investors, and it has been, hovering around 90 against a long-term average of 70. So this level is normally reached during any economic meltdown. And a key factor which has been behind the silver underperformance against gold is the changing geopolitical landscape over the last 3 years, which gave a boost to central bank gold buying. But this demand source was missing in silver.
Yeah, just talk us through those fundamentals of the silver market. So mentioned demand there, but how's supply been tracking in terms of the supply of silver, and what have been the main factors affecting that?
Yes, silver market has been in sustained deficit for past 4 years, and this year also we expect market to remain undersupplied. And this is despite this year we are seeing supply to grow by 3%, the total supply. And global mine supply is expected to grow by 2% this year after mine supply shrinking for 2 consecutive years. And this growth is coming from both greenfield and brownfield projects. And as production of other metals is projected to increase. A scrap supply is set to drive this growth, and higher prices has been incentivizing scrap supply and expected to grow by 6%, reaching to 200 million ounce, which is the highest since 2012. Having said that, challenges for silver mining supply will continue in medium and long term because the investments have in primary mine supply have been limited. And what we have seen over the last 1 decade, that share of primary silver mine supply has declined from 32% to 28%. So it means more than 70% of the silver mine supply is coming as a byproduct for other metals, which means that higher silver prices alone cannot be enough to stimulate more mine supply.
Talk us through the effects of the US import tariffs that we're seeing and how that's affecting the market.
US import tariff has been one of the key factors which has been driving silver prices and causing some kind of supply dislocation in the market. So fears of import tariff since December has started shifting the silver from London market to the US market, and there have been a significant amount of front loading as it is reflected in stocks in London vaults falling by 128 million ounce to 722 million ounce since November, while at the COMEX inventory jumped by more than 100 million ounce to 441 million ounce. So this has caused a significant tightening in silver in London spot market, and that has lifted borrowing cost of silver to 6 to 7%.
And then what's the outlook for the silver price from here in your view, and what's going to drive it potentially over the next year?
Yes, so going forward, we believe silver will be getting support from rising gold prices as well as strong industrial demand. So this year, I think improving China's industrial activity will be additional tailwind for silver prices. And since gold prices are already trading above 3,000 level, we believe that silver may attract investment from a relative valuation perspective. So for investors who have missed the price rally, silver could provide an inexpensive alternative. And we expect silver prices to move towards 38 over next 6 months.
Sunny Kamari there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, March the 27th. Catch you tomorrow with analysis from Coon of how the pending April the 2nd tariff announcement by the US administration may speed up stock market equity outflows from Asian economies. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.